It's almost 1 p.m. in Sydney, 11 a.m. in Hong Kong. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. Japanese stocks leading a Tuesday turnaround after the Mad Monday meltdown, reversing most of yesterday's losses. The yen snapping a 5-day rally. U.S. equity futures also gaining after the S&P 500 tumbled to the brink of a correction. The Treasury's rally igniting debate on how fast the Fed needs to cut rates. We're also going to continue our exclusive coverage inside Adani, speaking to Gautam Adani's eldest son about claims the family fortunes are too closely entwined with the Modi government's.
Being close to a political party does not necessarily mean that you get the work. You get the work because you are able to deliver.
All right, let's take a look at what's going on in markets. Plenty is the short answer, and whiplash seems to be the word of the day. Most of the action is in Japan. We've got the Nikkei and the Topics both rebounding very strongly by more than 9%. This is after yesterday's, the worst day since 1987 for the Topics and the Nikkei, in fact. We've got our analysis, though, saying that the afternoon might be a little bit tougher for Japanese equities because of all the volatility. They now hold a bigger risk allocation in portfolios, so that could affect the size of positions that traders can hold, might lead to more forced selling. So watch this space. The wild ride may not yet be over. Elsewhere, we've got the CSI hanging on to very, very narrow gains. The Hang Seng Index better by 1/3 of 1%. South Korean stocks staging a pretty strong recovery as well. Right, for a closer look at all this, let's bring in Bloomberg M Live strategist Mark Cranfield. Also joining us, our guest, Arindam Sandilya, co-head of Global FX Strategy at JP Morgan. Arindam, I want to start off with you, if I can, talking about the yen, which plays a pretty central role in all the action that we've seen. We've got the yen back at 145.25 now. It slipped a little bit. We've got equities recovering as well. But what's your outlook for yen strength? Do you feel this carry trade unwind's got a little bit of room to run yet?
Hey, Paul, yes, this is the most frequently asked question of the last 72 hours. And I'd say looking at the various suite of positioning metrics we have, we think that the carry trade unwind, at least within the speculative investing community, is maybe somewhere between 50 to 60% complete. So we are not done by any stretch. Most people would probably concur that yen is one of the most undervalued currencies anywhere within G10 or EM, which means that once you get snowballs on this scale, the odds of that continuing are larger than would be the case otherwise. And some of the technical studies we've done suggests that once you get very large, sharp moves in short periods of time, like we've had with the yen over the last week or so, the technical damage that it inflicts on portfolios is not easily undone. So you don't tend to get V-shaped reversals back to where the move started from. All you tend to get is, at least a good case outcome, is stabilization in markets around current levels, maybe a shallow recovery at best. But in many of these instances, you tend to get continuation of the moves, if at a lower velocity than what you've had before. So we generally are of a defensive mindset. We've been of this mindset for a while, and we still have in our outstanding recommendations some small allocation to long yen trades.
I guess another big question everybody's asking today is what was the role of the BOJ in all of this, and did we see a mistake last week? What's the path forward from here for the central bank?
So I think it's too early to comment, but my sense is the BOJ was very thoughtful in terms of shifting policy. They were very watchful, looking at a lot of data to ensure that this virtuous wage price spiral that they've been gunning for had taken hold. I don't think the overall game plan has changed particularly. Obviously, if the U.S. ends up being in a recession, then all bets are off. But short of that event, I suspect that the BOJ will want to continue normalizing rates. They're not really hiking in the way we understand other DM central banks to be. End of the day, their real policy rates are nowhere near calibrated to the state of the real economy. So from Governor Vera's perspective, a slow, measured gradualization path is still very much in train. We can debate the speed at which that happens. From a meeting-to-meeting perspective, I think there's going to be some consideration of what's happened in global financial markets. But as of now, I think if you are in his shoes, you're probably thinking that we stick with the plan.
I want to bring in our Bloomberg M-Life strategist, Mark Cranfield, now, just for try and explain what just happened over the past 48 hours and what's happening now. Is this a dead cat bounce, or is this recovery putting us back to where we were?
Well, certainly as far as Japan's concerned, it's going to be pretty heavy going for Japanese equities. The intense volatility that you've seen over the past week, it does mean that from a point of view of risk management, the implied volatility in portfolios now has jumped really off the scale. It's up to numbers we haven't seen for many, many years. And that will mean, in response, that many portfolio managers will have to take smaller positions to accommodate the changes in their value at risk portfolios. Now, what that means in a practical sense is that they may be forced to reduce positions, even if they don't really want to. They may believe that Japanese equities are now represent great value and that there's good upside to come. But it's just that their risk managers might be telling them you can't hold those positions because there's not enough space within your limits. So that kind of thing doesn't only apply to Japanese equities, but they're probably one of the most extreme cases. But if you look across asset classes, anything which has had huge swings in the past month or the past week especially, and if you look at the VIX index, it went off the scale just last night because of the turmoil in the United States market. So whether it's US equities, whether it's the major tech stocks, whether it's currencies, the Japanese yen has had a pretty huge swing as well. So all of those now can get compressed. People won't be able to take such big exposure, and the risk is that what you've seen will not retrace, and that we'll have to have a much calmer outlook for a few weeks before people can participate in the market again.
Let's take a look at the US side of the equation as well, because of course we did get that distressing jobs data, and we've been spending a lot of time looking at Sam's rule, and we have a chart that illustrates how that was triggered. But we heard from Claudia Sam. I mean, she says that her rule is not a law of nature, and it was designed to automate stimulus check issuance. Look, if you look elsewhere in the US, growth's not bad. Earnings have been pretty solid. Do we all need to calm down?
It doesn't mean that recessions automatically happen. We had an inverted yield curve in treasuries now for something like 2 years, and we haven't had a recession. It doesn't mean that you'll necessarily get one. But of course, the ball is very much in the court of the Federal Reserve right now. There are suggestions that they're behind the curve. They decided not to change rates in July, when some people were suggesting they really should have done. They've been warning themselves that the jobs market was starting to get a little bit worse in the United States. So they're really putting themselves in a position where they may have to cut by 50 basis points in September, just because they want to satisfy the market that they're not behind the curve any longer, and they can kickstart the move, particularly if the inflation data comes in a bit soft. There are 2 more readings before the September meeting, so certainly that may affect their decision as well. But at the same time, they won't want to cause panic. They won't want the market to think that they have to cut 50 basis points every time. It's going to need some pretty smart maneuvering from the Federal Reserve to make investors think that they are still in control of the situation and they haven't lost it, and that they can achieve this soft landing, which they've been talking about for some time. At the moment, the jury is out. It's a pretty close call between whether we have a soft landing or we go towards recession. And the Federal Reserve probably needs to step up and be quite aggressive to help that case.
Yep. I want to get back to Arindam for his thoughts on FX, because we've been seeing some strength in the Malaysian ringgit, the yuan as well. As the US softens, what are your favourite FX plays in this environment?
So in this environment, as we said at the outset, we want to remain defensive. I agree with many of the things that Mark said. Our global cross-asset strategists are also of the view that you don't have the full suite of technical and risk factors that you need to see to convictedly call a bottom in this market. So as of now, we have defensive allocations via longs in yen, in the Swiss franc. We are short euro, we are short Kiwi dollar, we are short some Canadian dollar. So this looks by and large like a fairly classically defensive portfolio in G10 FX. We are very, very light on risk within Asian FX. And we want to carry that light allocation till at least some sort of clarity emerges on where this risk environment settles.
All right, long yen, light on risk. Bloomberg MLive strategist Mark Cranfield and Arundham Sandilia, co-head of global FX strategy at JP Morgan. Thanks so much. Still to come, we're going to speak with Gautam Adani's eldest son, Kuran, about claims the family fortunes are too closely entwined with the Modi government. Our exclusive series taking you inside India's Adani Group next. This is Bloomberg. More now on our exclusive series, taking you inside India's Adani Group. Kuran Adani is billionaire Gautam Adani's eldest son, and he oversees businesses including cement, ports and logistics. And they provide much of the critical infrastructure, allowing global companies to plug into India's $4 trillion economy. Adani's now planning to take over seaports in the Middle East, Africa and Southeast Asia as it tries to challenge China's dominance in key trading infrastructure. In our exclusive interview, Kuran Adani also dismisses allegations that the group's fortunes depend on their close ties to Prime Minister Narendra Modi.
This man holds the keys to one of the biggest logistics businesses in Asia. Kuran Adani is the eldest son of Gautam Adani, the Indian billionaire who built a sprawling infrastructure empire that's pivotal to the country's economic ambitions. He's been handed the reins to some of the most important businesses for the Adani Group, including ports. Kuran is visiting the Mundra port in India's Gujarat, the home state of Prime Minister Narendra Modi, whose policy priorities the Adani Group has closely tracked as part of its business strategy. Mundra is where it all started for the group, which is now India's biggest private operator of ports. Maintaining and building on that growth will be a key challenge for Kuran. He is one of the 4 family members handpicked to run big chunks of the Adani empire as part of his father's succession plan. However, the firm's meteoric rise has been overshadowed by accusations it's benefited from cronyism. It also took a multi-billion-dollar hit from the explosive Hindenburg research report, with a short seller claiming the Adanis engaged in fraud and stock manipulation, allegations that they've denied. Bloomberg's Anto Antony sat down with Kuran Adani for an exclusive interview and asked him about the challenges ahead.
The group's rise has been closely linked to Prime Minister Narendra Modi, but at the same time you are working in several other states with other governments also. How do you do the balancing act there?
Being close to a political party does not necessarily mean that you get the work. You get the work because you are able to deliver, you are competitive in a market, and we have run it in a most efficient manner. You don't have these 3 things, there's no point being close to any political party, or because today's India is no more about giving favors. It is all about whether you're competitive in the landscape or not.
Many of the investments which the group is making, whether it's in Sri Lanka or Israel, the way in which many analysts are seeing it is like you are playing a strategic role for the government of India to facilitate certain trade routes. Now, as a group, you balance the requirement to serve a strategic need and at the same time maximize profit as a publicly traded company.
So I think certain positions that we are taking is also strategic for us as a company, because going back, we do see that there's going to be continuous disruption. And we look at where are the major trade routes from India and how do we minimize those disruptions by having a position over there. So that is the first fundamental one. And second is obviously if you look at from a geopolitical perspective, yes, India has certain geopolitical priorities, but that doesn't mean that those priorities are companies' priorities. We take our individual assessment. End of the day, we look at risks, we look at profitability, and for us, family is also one of the largest shareholders. So we have to do justice to the family as well, apart from the minority shareholder, because end of the day, all the investments that we are making, whether it is in power or whether it is in ports, these are investments which have to give returns on a standalone basis.
Adani Group is known for chasing scale. What would be the global ambition like as you oversee the business over the next couple of years?
I would not say we have a global ambition. I think the ambition is by 2030 we want to be handling at least 1 billion ton of volume, predominantly coming out of India, because as India is going to grow, the trade is going to grow, and obviously and we are in the right position to take that sort of growth. I think the second part is to give a reliable supply chain solution into our neighboring countries and making India as a center point of that whole supply chain. And that is the idea, that how rather than cargoes getting transshipped in Dubai or in Singapore, how do we make India as a center point of the overall supply chain from east to west? And that's where we are looking to play, to create that larger vision of making India as a center point. Wherever we do believe that we have to take a position, we are happy to take a position over there.
When the Hindenburg short seller attack happened, it must have taken a lot of management bandwidth and mind space away from chasing this vision. Now, how did you deal with it personally, and what role specifically did you play at that time?
So at that time, basically my responsibility was 3 things. One is obviously to make sure that business resilience continues, not just in ports but across the group, in terms of our performance, in terms of our operational efficiency, in terms of our capital capex efficiency. So that was number one. Second was to ensure that from a leadership perspective, we were completely aligned. There was no critical people leaving during this time, and they were ensuring that we were all working together to achieve the goal, to make sure that we weather the storm. And that's what that was a main priority, to make sure that whatever performance parameters that we have achieved in the past, we beat that during this period.
One overhang, even right now, is the kind of investigations or probes which are there into the company. And also at the same time, there are allegations regarding opaqueness in the holding structure. How do you assuage the investor concerns on this front?
See, I think if you look at from investor perspective, right, as a group, we went through this transition from 2007-8. So if you remember, in 2007-8, we had a holding structure. We had Adani Enterprise, and then we had all the other companies which were subsidiaries of it. And again, going back to getting feedback from the investors, they said that we would like to have a clean structure. And that's where we started demerging. So ports got demerged, Adani Power got demerged. So basically the shareholders who want to invest in ports, they know that they come into APSZ, or investors who know that they want to only invest in energy, they know that they want to come into renewable. So one is, there is a clean structure from a holding perspective. So there is no crisscross holding which is happening. So it's a very clear structure. Family holds directly into each of these entities. Second is, when you look at from a family perspective, family holding perspective, all of that has been disclosed, because we have 23 or 25 international issues, bond issues across various group companies, again rated by all international agencies, investment grade rating. And part of it, unless you don't disclose all of this, there's not much of, you don't get through that hoops of getting that rating. All of that has been disclosed. And coming to investigations and other things, where the issue would come is if, as a group, we have not disclosed something. All the investigations that so-called Hindenburg report has been talking about is all disclosed, whether it is in our annual report, whether it is in our bond issuance, or whether it is in or any of our IPOs as well. So if you remember, before Hindenburg, just before Hindenburg, there were 2 IPOs which we did. I mean, demergers we did. One was the demerger of Adani Total Gas, And then the second is again the IPO of Adani Wilmar. Now all of this, SEBI will not give you clearance if you have certain issues going on.
Your father is a first-generation entrepreneur who, from the scratch, built one of the largest conglomerates in the region. When the transition happens, for you to step into his shoes, those are some pretty big shoes to fill. How will you go about it?
As you move from first gen to next gen, I mean, we realize that what they're leaving us behind is a sort of a legacy, as well as not just a business, but a platform which we have to protect and ensure that we pass on to the next generation as well. We also realize we can't work the way he is working, in the sense that his risk appetite is much higher than what ours is. So we realize where our shortfalls are, where our strengths are, and we work on our strengths, and whatever we have learned from him, all the wisdom that we have learned from him, we try to work on it on a day-to-day basis.
But hunger for growth is something which differentiates Adani Group from many others, as Mr. Gautam Adani has said. Now, risk appetite is a key part of it. Why are you saying that in the second generation, the risk appetite could be slightly
It is bound
less?
to happen, right? So this is evolution of life. First generation, you have grown from nothing. Your risk appetite is much higher because even if you lose everything, you're back to where you had started. We are starting from a level which is something higher than what they have started. So we have a larger responsibility to make sure that we protect and to grow from there.
Mr. Gautam Adani has talked about the middle class values that the group espouses. Now, the second generation has mostly born into wealth. Is there a pressure to
I would
conform?
differ over there a little bit, because we've not been born into wealth. A large part of our childhood has been through a struggle as a family. It's just that in the last, 15, 20 years is what we see. But a large part of our childhood has been of struggle. We have seen our parents struggle everyday basis. We have seen them go through tough times as well as good times. We have seen them aspiring for more and working hard. And we have seen them dream together to reach to that aspiration. And we have also seen a lot of support from the larger family, and more importantly, valuing what we have.
Kuran Adani speaking exclusively with Bloomberg's Anto Anthony. And we'll have more on the outlook for Adani Ports later this hour with Axis Capital analyst Sumit Kaishore. This is Bloomberg. Let's take a look at the Japanese yen weakening a little. We've just had the news that officials from Japan's Ministry of Finance, the BOJ and Financial Services Agency are going to hold a three-way meeting this afternoon, 3 p.m. Tokyo time, to discuss international markets. This is according to a notice from the BOJ, so the yen just softening a little. We're, of course, watching the Aussie dollar as well. We do have a rate decision today from the Reserve Bank of Australia. We're anticipating a hawkish hold there at 4.35%. I want to take a look at crypto assets as well. We do have Bitcoin recovering somewhat. It did get back above 56,000 briefly today. Saw 150 billion wiped off Bitcoin in 36 hours, but a little bit of a bounce back there. Ether up by 2.8% as well. Coming up, an exclusive conversation with JLL's Pamela Ambler on investing in Asian commercial real estate. That's up next. This is Bloomberg. All right, let's take a look at what's happening in Japan. Plenty. Avril's keeping an eye on things. Avril.
Yeah, so much happening in the past couple of days. Today, what we're seeing is a powerful rebound on the Nikkei, on the topics, about 9% higher, set for its best day since 2008. If these gains hold, and quite a fair bit of clawing back of the 12% declines from a day ago, but something to consider as well is where we go from here in terms of Japanese equities, because it's still a ways from the 200-day moving average and the peak that it reached in July. And given how investor sentiment has really been rattled, it's going to take a while to restore confidence. I'll flip the board because, of course, all this was happening against the backdrop of a BOJ that's since been accused of pulling the trigger too early on rate hikes and then signaling more hikes to come. There are all these questions about the timing of these tightening, and we're also seeing how this is happening against a backdrop of concerns that the Federal Reserve is not easing fast enough. And given all this, we're hearing how the BOJ coming under fire. It's also going to come through with a tripartite meeting with some of these financial ministry officials. We're seeing the yen now weaker as these signals that maybe we see a future rate hike put on ice. Paul?
All right, thanks, Avril. Well, let's get some more on markets now, including that massive rebound in Japan. Trading's back underway. Let's bring in our MLive strategist, Mary Nicola. So, Mary, this rebound that we're seeing in Japan, does this look sustainable, or is this just the dead cat bounce ahead of another leg down?
There's still a lot of nervousness and angst in the market. So, and as long as volatility lingers, it's going to hard to see a sustainable turnaround. So we still need to see some fundamental drivers, some fundamental catalysts to really pull the market out of the doldrums and really reduce some of that volatility and angst that continues to permeate.
Well, we just heard that there's going to be a meeting shortly in Tokyo between the BOJ, the Financial Services Agency, the Ministry of Finance as well, to discuss international markets. What might the specifics of that conversation be?
Yeah, as we know from previously from lots of different officials, is that officials hate volatility. And what we've seen over the past few days has been an absolute wild ride. So it's more about trying to placate markets, that they're watching and that they're focused on this volatility. But of course, at the end of the day, a lot of this is sentiment driven, momentum driven, and it's hard to stand in the way of the momentum that's currently persisting in the markets.
Is the BOJ likely to come under any pressure for its move last week? Some of the conversations we've been having today circulated around the idea that perhaps they made a mistake, perhaps they came under political pressure.
Absolutely. I think what the market unwind is showing is that did they move too soon? But the reality is, if you look at what we saw from labor cash earnings, we saw an increase in there. Suggests that it's not so far-fetched to start just incrementally moving towards normalization. Remember, they're not hiking aggressively. They're just moving towards normalization. Rates are still very low. They're at 0.25, and they're only just moving at a very slow pace in terms of unwinding their balance sheet. So it's hard to say that they're actually tightening. More so, they're moving towards normalization. Even then, they'll still be criticized because of some of the wild moves that we've seen in the market. But at the end of the day, you'll still see a stronger yen, and that's likely to persist.
All right, Bloomberg MLive strategist Mary Nicola there. With volatility gripping equity, bond and FX markets, investors may be looking to real estate as an alternative. JLL has just released its latest report on property investment volumes in the Asia Pacific, and it found a 7% jump in the first half of 2024 compared with last year. So let's get more with Pamela Ambler, APAC Investment Intelligence Head at JLL, joining us out of our Singapore studio. Pamela, we have seen real estate getting whipsawed along with pretty much every other asset this week, but longer term, what is your survey saying about trends in the sector and the outlook?
Well, thank you very much for that question. We are looking at the transaction volumes that have taken place in the second quarter, and based off of collective data across all the markets in Asia Pacific, we have seen for the first half of the year, as well as for Q2 alone, the markets have been up. And that's a contrast compared to what we've been seeing in the US and Europe as well. But basically the strongest market here is Japan. There's a lot of conversation and stories around what's happening with the BOJ and how that's really redirecting investors to look at that market. It actually creates still a very positive spread between office yields and risk-free rate. So it continues to be a very attractive market, Japan.
Yeah, in terms of Japan, I note from your report that hotels have been among the strongest performers, and perhaps no surprise with the weekend, that's been a very appealing destination for tourists. But do you see hotels continuing to outperform as the BOJ changes tack?
Yeah, absolutely. The hotel's interest, a lot of that is coming from foreign capital investing into Japan. For that sector in particular, it's also driven not necessarily just from the currency weakness, but also just the tourist arrivals. And we have seen continuously increases in that tourist arrival to Japan. And we continue to see that and expect that to take place in the coming quarters.
Can you see any risk to some of your outlooks around potential recession, not just the US, but also tightening in Japan and what's going on in other markets as well?
Well, so an increase in U.S. recession probability is actually an impetus for the Fed to begin cutting rates. When rates come down, real estate is probably the most sensitive towards those rate movements. It brings down the cost of borrowing, which then allows both tenants as well as landlords to make decisions around whether it is acquisition in terms of buying or their longer-term rental decisions, all of which is actually positive news for the commercial real estate sector.
I also note that you found that overseas investors are quite cautious on China real estate. I mean, it's something of an understatement. I wonder if you're being a bit diplomatic there. Do you see any bright spots at all in the China property segment?
Yeah, the demand that we're seeing in China, especially around offices, is the end users that are taking the opportunity where there is a pricing adjustment taking place to acquire office space where they can use for themselves. Alternatively, we also see there are still some foreign investors going in. Again, they are looking at an pricing opportunity in a window. Whether or not that pricing valuation has come to a trough, we don't know. We actually do expect that probably to continue to correct for the coming quarters. That will remain actually an attractive, not just for the domestic investors, but for the foreign investors looking for bargain hunting opportunities.
What about government support in China? Do you think that that's been adequate, and do you anticipate any more coming?
Yes, I think it's been very measured in terms of the government support, and they have to do that because there is the concern between the PBOC policy as well as the Fed policy. They don't want that divergence to become too large. When that is large, historically speaking, we have seen a huge amount of capital outflows from China, and that is what they're trying to prevent. So instead of releasing stimulus in a very big way, they are slowly supporting in various different ways, mostly through, of course, the lending through the banks and encouraging them to lend to small and medium-sized businesses as well as to the troubled developers.
All right, Pamela Ambler, APAC Investor Intelligence Head at JLL. Thanks so much for joining us. Let's get back to some of the volatility that we're seeing in markets. Japan has been holding a 10-year bond sale. Interesting timing there. Demand measure for that lowest since 2003. We've got MUFJ-MS buying 12.7% of those 10-year bonds at the sale. Yeah, in terms of timing, this is $18 billion worth of notes maturing in June 2034, and it just comes on the heels of that big drop that we saw in the 10-year yield. That fell on Monday by more than 20 basis points. That was the biggest move that we'd seen since 99. And that came on the heels of a second rate hike from the BOJ at the end of last week. So interesting timing for that rate move, interesting timing for this bond sale as well, and tail demand measure for that, the lowest since 2003. Still to come, Axis Capital is going to join us to discuss their outlook on Adani Ports. Now, this is as the company seeks to take over more seaports in the Middle East and Asia. This is Bloomberg. All right, welcome back to Bloomberg Markets Asia. You are watching the India focus. They're 3.5 minutes away from the open in India. It looks like we're going to see a bit of a modest rebound there. The pre-market, we've got the Sensex better by about 0.25%. The bank index better by almost 0.7%. Plays into the broader theme of modest recovery that we're seeing around the region. Modest unless you're otherwise in Japan, where we're seeing a very powerful rebound as we've been discussing. But the pre-market there looking modestly risk on in India. Well, let's get back to our exclusive coverage inside Adani. Kuran Adani is billionaire Gautam Adani's eldest son, and he oversees businesses including cement, ports and logistics. Now, they provide much of the critical infrastructure, and they're now planning to take over seaports in the Middle East, Africa and Southeast Asia as well.
India is in a very sweet spot when you look at it from the whole global perspective. If you ask me, this is a time for India to shine and take the lead, whether it is shifting of the manufacturing of China Plus One, the whole logistics supply chain moving from a globalization to a regionalization, and how we play a critical role in assuring that the supply chain is efficient and at the same time with least amount of disruption.
All right, let's bring in Axis Capital's Sumit Kaishaw. He's their Institutional Equities Executive Director and Research Analyst for Industrials, Power, Logistics and Infrastructure. So, Sumit, we're hearing about aggressive expansion plans for Adani Ports, Middle East, Africa, Southeast Asia, the rest of Asia as well. How do you see this playing out?
Sure, thanks for having me on the show, Paul. I think the overseas aspiration of Adani Ports must be viewed in conjunction with their leadership position in the home market. In a country the size of India, Adani Ports handled 27% of all India port cargo volumes. Last fiscal, they handled almost 44% of India's total container cargo volumes. International port volumes accounted for under 3% of their total 420 million tons in FY24, mainly attributable to the Haifa port that they operate in Israel. Adani Ports is targeting to handle close to 1,000 million tons of cargo by 2030, double of their 2025 target. They want to raise international volumes to about 10 to 15% of their total volumes by 2030. Recently, they won a concession for a 1 million TEU container terminal in Tanzania. The company has mentioned that it is actively seeking opportunities to build global scale in areas like South Asia, Southeast Asia, Africa, in JV with strong local partners. They want to become a part of the global port network, linking regions worldwide with India at the center, to accomplish their vision of becoming the world's largest port by 2030.
Yeah, to what degree does that expose them to quite a bit of volatility, though? Because we saw international volumes down 31% in the first quarter for Adani. To what degree are they sensitive to geopolitical tension, particularly the Middle East?
Well, at least for their only operating international portfolio in the first quarter of FY25, the Haifa port volumes were, nearly half the run rate, or down 30% on a year-on-year basis. But it's still very small in the overall scheme of things, where international ports accounted for under 3% of their volumes in FY24. So I think they are exposed to the overall slowdown in trade and commerce at a regional level. But as for now, their their container cargo volumes saw a healthy growth in the first quarter.
So Adani Ports has recently opened a new transshipment terminal in southern India. What sort of meaningful contribution do you see that making to the bottom line?
Well, one has to look at this in the context of the fact that currently 25% of India's total container traffic is transshipped en route to the destination. So over 75% of the transshipped cargo is handled by ports which are outside India. That's almost 4 million TEUs on an annual basis. Vizhinjam, which is located on the southeast coastline of India in a state called Kerala, is part of Adani Ports' strategy to tap into this transshipment market. It is an automated port, highly mechanized. It has, capability to handle large ships. They'll have 1 million TEU nameplate capacity operational by October 26, and they want to completely utilize this capacity by the end of financial year FY26. So, and thereafter, they would be looking to expand capacity of Vizhinjam. So I think this is a very credible opportunity to tap into the transshipment volumes for India.
So we've been talking a lot this week about succession plans in the Adani conglomerate. How confident are you about the plans for Adani Ports? Is there going to be just general continuity, or do you anticipate any meaningful changes coming?
I think there is a long roadmap of visibility when it comes to leadership for Adani Ports and SEZ, because Mr. Kuran Adani is still in his 30s. So I think, even the family head, Mr. Gautam Adani, still has a long way to go before he touches 70. So I think there is ample visibility on the senior leadership of the company at the promoter level. And there is independent CEO, CFO who are handling portfolios for group companies, including Adani Ports and SEZ.
All right. Just finally want to get your call on Adani. You've got a buy rating there. What's your outlook for earnings and share price by the end of the year?
So we believe that the company can deliver on over mid-teen port cargo volume growth over the medium term. And with the improvement in realizations that we typically see on an annual basis, the company should be able to deliver high-teen EBITDA CAGR over the medium term, including in FY25.
All right. Sumit Kaishaw, Institutional Equities Executive Director and Research Analyst for Industrials, Power, Logistics and Infrastructure Capital at Access Capital. Thanks so much for joining us. Just getting to you some breaking news from the Democrats' National Committee. Kamala Harris, now officially the presidential candidate. So really confirming what we knew all along, but it is now official. Kamala Harris has formally won the Democratic presidential nomination. So the results of the electronic roll call, we had 99% of participating delegates voting for Vice President Harris, 4,567 delegates from across the country now casting their vote for her. So Kamala Harris, the official nominee. We are still, of course, awaiting to hear who her vice presidential pick will be, and we are expecting that imminently. All right, let's have a check on how Indian markets are tracking at the moment. After the first 9.5 minutes or so of trade, looks like we're having a modestly risk-on session at the moment. The Sensex better by 1.25% now. Plenty more ahead. This is Bloomberg. Bangladeshi Prime Minister Sheikh Hasina has resigned and left the country, succumbing to pressure from millions of protesters. But Bloomberg opinion columnist Karishma Vaswani says the people power victory in Bangladesh could be short-lived as the nation faces further economic chaos. Karishma joins us now for more. So Karishma, tell us more about Sheikh Hasina's dramatic exit and what it means for the country.
Well, one of the key concerns that the international investment community will be looking at is how the nation will now see a sort of peaceful pathway, a transfer of power. We've got the army in place. They're saying they're calling for an interim government. What kind of interim government that will look like is still unclear. And remember, you know, the events of the last few days have not been the only sort of dramatic protests or uncertainty that we've seen in Bangladesh to date. And one of the key priorities as the nation begins this sort of prospect of rebuilding in the wake of Sheikh Hasina's departure will be to see whether the demands of protesters are acknowledged, whether the kind of people power that you're seeing on the streets, the anger that's been spilling out, whether that will be addressed, and also what kind of government the people, the protesters that have been demanding for change, that have wanted corruption to be removed from the administration that they say has crippled the economy and their opportunities, whether those needs will be met. And I think that is going to be key in the days and weeks ahead as Bangladesh tries to find some way out of the current economic and political chaos to some sense and some degree of stability.
Well, there'll be an interim government. There's a promise of elections to come. What's the international community going to be looking for in terms of stability?
Well, for those promises to actually materialize, one of the key concerns, of course, for the international investment community, and particularly regional stability, when you look at partners like India and China, and I think in particular New Delhi, who is watching this very closely, is what kind of makeup will any new administration have? Now, of course, over the last few years, Sheikh Hasina has managed to balance the interests of both China and India very cleverly, relying on political support from Delhi, but also relying on economic support from China. And I think this is going to become a real headache for India as it tries to navigate any new government that comes into power over the next few weeks and months, because it's going to be trying to ensure that regional stability stays intact and that any new administration doesn't lean too closely to China. Now, for Bangladesh's part, addressing the needs of its people is going to take financial investment, particularly from the International Monetary Fund and other partners. But the clear priority right now is to find a way to address the political protests on the streets and acknowledge the demands of young people.
All right, Bloomberg opinion columnist Karishma Vaswani there on those dramatic events in Bangladesh. Let's take a look at how we're tracking here in Australia. It's a modestly risk-on session here as well. We've got the ASX 50 better by about 0.5% at the moment. Financials doing reasonably well, and it is, of course, Reserve Bank of Australia decision day, buried amongst all the noise. We do anticipate a hawkish hold from the RBA at 4.35%. We have had a situation with elevated inflation here in Australia. Recent data, though, has been somewhat encouraging. Certainly not enough, though, to suggest that the RBA would be ready to cut yet, but a hawkish hold appears to be the consensus. Meanwhile, we've had a dramatic day on global markets again. Most of the action in Japan. Got the Nikkei and the Topix both better by 10% at the moment, and there will be a meeting later today between the Bank of Japan, the Financial Services Authority and the Ministry of Finance. So we'll stand by for any news out of that as well. And that is it from Bloomberg Markets Asia. Horizons Middle East and Africa up next. This is Bloomberg.